Hi and welcome to this video. How is your weekend going? It's going to be an extremely busy day on this channel. So I think I have about 4 or 5 more videos coming up. There's a schedule at the end of this video and you can keep that screenshot or just have it in mind to know what comes up next. I'm looking at Okomu Oil Palm H1 2025 numbers. First, an outline of what I'm going to go through. H1 meaning first 6 months versus the prior year. Q2 meaning the second quarter of 2025. That is April, May, June this year versus April, May, June last year. Then I run through my dividend discount model. And then finally, my view on price. So let's get right into it. About the firm, Okomu was established in 1976. Some other resources I saw say 1979. But one thing that there's no ambiguity about is the company became a PLC, a public company, in 1990. SOC Finav Luxembourg owns 62.1% of the firm. Rest, I believe, is held by Nigerian domestic institutional rather and retail investors. Primary activities: development of oil plantations, palm oil milling and processing. The company also owns a rubber plantation. So how did the H1 2025 go? You can see revenue up 73%, profits after tax up 135% compared to the prior year. So 129.8 billion in revenue and profit after tax of 47.5 billion in revenue in profit rather. Um, One thing I like to look at in companies is the net margins. And you can see that the margins are decent profit margins. I like to see 20% profit margins. So definitely for my own personal investing, which isn't your investing, but for my own investing, I typically like to see profit margin of at least 20%. So as a H1 profit margin of 36.61%, in simple terms, it means that for every 1 naira in revenue, 36 kobo was profit. So, and it went up decently year on year. Last year, for every 1 naira in revenue, 26.9 kobo, essentially 27 kobo was profit. So, that's a pretty decent performance. Also, we are in a high inflation environment. How about Q2 and I think I should correct this. Can I? Let's see if I can minimize. This should be 2024. All right. And so we can go back to presenting. Yep. So that should be 2024, Q2 2025 versus Q2 2024. Um, Revenue went up sharply. So this tells me that Q2 numbers were better than Q1 um, numbers. So revenue up 71.7 billion in revenue, profit of 25.7. Now the essence of just having this split is when you are trying to do your forecast, you can either decide to forecast with earnings per share, or you can decide to. I mean, it's the same thing, but if you want to be, if you expect and you see it in the video I'm going to do on Champion Breweries, where I play around with the number of shares they have currently and maybe after they've raised equity. But if you just want to be a bit granular, you can say, let's take Q2 numbers so that stripping it away lets you forecast accurately. You can now take Q3 and Q4 based on Q2 performance. Obviously, we have variations because this is an agri firm, weather, sales, and all the likes. And I think so you have seasonality to consider. But the essence of stripping it is, if I want to forecast Q3 and Q4, the proper way to do so would be to use Q2 2025 numbers. So you can see that Q2 numbers were probably stronger than Q1 numbers. Now, in terms of modeling, right? I I use the dividend discount model. I mean, you can use discounted cash flow model. Probably I would throw that in when I'm writing the articles. Articles should be up. Who knows? Maybe towards evening on the Green Ticker website. So keep an eye out for that. There'll also be a Spotify audio podcast episodes coming up shortly after. So if you're on Spotify, whenever you're watching this, very likely that you have the Spotify episode 15-20 minutes after. So what I did is to say, let's look at let's work with the dividend growth rate of 15%, required rate of return of 20%. Now, one of the conditions, in fact, the main condition for this model to work is that your required rate of return has to be higher than your growth rate. So you can play around with it. You can use it as 0 point, maybe 10% dividend growth rate, required rate of return 20%. And I mean, it's a table, so you can use this. If you're an Excel person, you can simply take this formula, put it on your Excel sheet, and play with the numbers. I did different scenarios for these. Tops I got in the most conservative upside. It's maybe 1,000 naira, or maybe 1,200 and some fraction. But honestly, and if you check my Twitter handle, you can probably see where I did this thread on it. We have different analysts discussing the stock, and we'll come about with different scenarios and views on it. I think our tops, the stock is trading at what, 998. Tops stock is maybe 1,000 naira fair value, but even the 1,000 naira is a bit a stretch, because that's about stock will be trading at what, 10 times earnings. And so you can see my view. That's why I have a whole view here. Earnings per share, full year estimate earnings per share is maybe 89 naira, tops 90 naira. You apply what, at best maybe 9-10 times PE ratio, get a value of somewhere between, target price of somewhere between 810. 90 times 9 is what? 810, right? Yeah, 90 times 9 is 810. So you get a value of somewhere between 810 naira to maybe 900 naira. So I think the stock, in my view, has maxed out. Now, even if you're going to use CAGR, average growth rate, averagely you see earnings growing, I think around 30 something percent in the last few years, or is it 50 something percent? You can check my thread. The challenge you would have is if the stock is trading at 1,000 naira, and it needs to grow, even if you apply maybe 15% earnings. So that tells me that's maybe 1,002 or 1,003 or whatever. You're going to need to have a 40 to 50% growth in revenue from these numbers. The last couple of years, the growth in revenue that you've seen, it has largely been driven by price. So the question you have to ask yourself is, do I think that the next 2-3 years are constantly going to see maybe 20-30% or more annual increase in price? And the answer is probably no. So I think that this stock has peaked. From a dividend perspective, it's maybe not so bad, because they paid what? Interim dividend, they're going to pay, I think it's 30 naira. And so that's about 60% of its first half earnings and the likes. So you then work out the numbers, maybe you're going to pay another 60%, 40-50% for H2. If you look at it from that perspective, maybe if you get a final dividend of what, 20-25 naira, maybe another 30 naira. So 60 naira dividend for a 1,000 naira stock. 60 divided by 1,000, 10% dividend yield is what, 100. So you have a 6% dividend yield. So dividend wise, the stock would return decent numbers dividend wise if you got in at a much lower price. So if you got in at 600, 700, 800, then your dividend yield is in the be higher than 10%. And my own cutoff for my own investing is, I think I like to see a dividend yield of at least 10%. Because Nigeria is a high inflation environment. Average inflation is what? Long run inflation, I think, is about 12-15% or so. So if my dividend yield is at least 10%, I'm kind of satisfied with that, because I can then take my dividends and put it into something that will yield a higher return. Other rationale, most expensive stock by book value, and you can refer to, I think I have a video on the channel. So if you are watching on LinkedIn, I don't have all my videos on LinkedIn. I can't possibly post all my videos. So please, you need to, at some point in time, you might need to cross over to YouTube. Please bear with me. Ultimately, sometime towards the year, I dump all my videos on the Green Ticker Tales website. But for now, you just have to kind of bear with me. So most expensive by book value across all the players, trading at 11 times book value. Presco, which is the biggest player by size, at least listed, it's traded I think at 7 or 8 times book value. LRX less than 2 times book value. So also trading higher than the average PE ratio on the exchange, which is about 8x. So whichever way it is, it's a hold. Hold simply means don't buy or don't sell. As always, disclaimer: this is not investment or trading advice. Do your own research. Stocks are a high risk investment. I think a lot of people forget that stocks are a high risk investment. For more content, check out the site greentickertales.com, the podcast, the Green Ticker Tales podcast on Spotify, Apple Music, YouTube Music. Links to all my bios. So if you have any questions or whatever you need, everything, all the links are in my bio on YouTube. Questions you can also drop in the comment section. Send an email to info@greentickertales.com. Schedule for the day. Yep. Next video you can see Airtel Africa Q1 2026 or 2025 2026, followed by Champion, then Guinness Nigeria, rounding up the day, maybe with Dangote Sugar. Dangote Cement numbers are out, Boa as well. So it's possible I might decide to just do a joint video for all the Dangote numbers. I'm not sure yet. I mean, all the cement numbers, rather. I'm not decided yet, but I like to do standalone videos because I can then talk a bit more into context. Mostly because they're bigger firms. So see you in the next video. And if you can't make the next video immediately, if you're still catching up on sleep or just hanging out, enjoy the rest of your day.